Picture this, you finally managed to save $100, maybe from a side hustle, maybe from skipping a few weekend dinners, or maybe just from budgeting tightly. You look at that crisp $100 bill or that digital number in your account and a thought crosses your mind. What do I actually do with this? You want to grow it. You want to make it work for you. But then the internet hits you with a wall of noise. People talking about crypto tokens, day trading options, real estate syndicates, and complex forex charts. Suddenly that $100 feels completely useless. You start thinking, can you even invest with just $100, or is that just pocket change meant for a coffee? The truth is you can, but if you do it the wrong way, you'll lose it faster than you can say stock market. So in this video, we are going to break down the exact, smart way to invest your first $100 without getting scammed, overwhelmed, or wasting your hard-earned cash. My name is Jack. If you are ready to turn small money into real wealth, hit that subscribe button and give this video a thumbs up. Let's dive in. Let's start with a hard truth that most financial gurus won't tell you. Your first $100 is not going to make you a millionaire overnight. And if someone promises you that a $100 crypto meme coin will turn into 10 grand by next Tuesday, run away. That is not investing, that is gambling. When you are starting with a small amount, your number one goal is not maximum profit. Your number one goal is habit building and learning the mechanics. Think of your first $100 as your tuition fee for financial education. You are learning how brokerage accounts work, how markets move, and how to control your emotions when your portfolio drops a few bucks on a random Wednesday. Now let's look at the math for a second. Imagine you take that $100 and put it into a high-yield savings account earning 4% interest. After a year you've made a grand total of $4, not exactly life-changing. But what if you put that same $100 into a broad market index fund averaging a 10% historical return? After a year you have $110. Still small, right? But here's what changes the behavior. Once you invest that first $100, you cross an invisible psychological barrier. You stop being a passive consumer and you start acting like an owner. So how do you actually deploy that $100 the smart way? It starts with choosing the right platform. Before you buy anything, you need a vessel. You need a reputable, low-cost brokerage account that allows fractional shares. Fractional shares are a game changer for beginners because they mean you don't need hundreds of dollars to buy a share of a great company or fund. You can buy a tiny fraction of it. Look for platforms with zero commission fees so that a small trade doesn't instantly eat up your capital. Next, you need to avoid individual stock picking. This is where 90% of beginners make their first major mistake. They take their $100, look at a massive company like Apple or Tesla and buy a share because they recognize the name. But here is the problem. If you only own one or two companies, your entire portfolio is at the mercy of whatever happens to those specific businesses. If they drop, you drop. With $100, you cannot build a diversified portfolio of individual stocks. Instead, you want to buy your first index fund or ETF. Rather than trying to find the next big stock, you buy a piece of the entire market. Exchange-traded funds and index funds bundle hundreds of companies together into a single investment. When you buy an S&P 500 ETF with your $100, you are instantly buying a tiny sliver of the top 500 biggest companies in the economy. Companies like Microsoft, Amazon, Apple, and Johnson & Johnson. If one company struggles, the others cushion the blow. It is the ultimate low-risk, beginner-friendly way to start. After that, your focus shifts to automating the habit. Here is the secret weapon of successful investors. It's not about timing the market, it's about time in the market. Once you invest your first $100, the real victory isn't the initial profit, it's setting up a system where you add another small amount every single month. Consistency beats capital every single day of the week. Let's address the psychology here because it always creeps in. When you look at your account and see your $100 dip a little because the market had a bad week, it feels scary. You might feel the urge to sell everything and pull your cash back out. Let me give you a quick analogy. Investing your first $100 is like planting a single apple tree sapling in your backyard. On day one, it doesn't give you any shade, it doesn't give you any fruit. In fact, a strong gust of wind might make it look shaky. But if you dig it up every time the wind blows to check on the roots, it will die. You have to plant it, water it with consistent monthly contributions, and walk away. Over time, that tiny sapling turns into something that feeds you for life. So let's summarize the smart way to handle your first $100. First, understand that it's a tool for building habits, not a lottery ticket. Second, open a zero-fee brokerage account that supports fractional shares. Third, skip individual stock gambling and buy a broad market index fund or ETF. And fourth, focus on building the consistency of adding to it over time. Because here is the truth, the hardest part of investing isn't figuring out the math, it's starting. If this video helped you figure out what to do with your first $100, make sure to hit that subscribe button. And let me know in the comments, what is the biggest thing holding you back from making your very first investment? Drop your thoughts below and let's talk about it.